following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tosaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back once again to the Option Block. We are, of course, your bi-weekly source for all things options related. My name is Mark Longo from a little thing called theoptionsinsider.com, as well as from the ever-growing, ever-expanding Options Insider Radio Network, upon which many of you are certainly listening to this fine program today. Of course, we welcome all of you coming in from all areas and ways to get your fine audio podcasts, Stitcher, iTunes, AHA Mobile, built into your in-dash, streaming from the website, wherever you like to find our stuff. We welcome you to the show today. And we do have a great show in store for you today. We have the core panel, the way the show kind of kicked off way back when. In fact, all the people named in the intro are here today, so that's kind of fun. We're missing one, but we shan't be any worse the wearer for that, because it's going to be a fun one today. Starting off with the man beaming in from St. Charles, Illinois. You know him, you love him as Uncle Mike Tosaw. He is, of course, Mike Tosaw, the asset manager, major domo over there at RCM. Mr. Tosaw, welcome back to the show, sir.
Always happy to be here, especially when I can say I'm the one broadcasting from the furthest away. I like regaining that title again for a change.
Yeah, no Maine, no Miami, no craziness, just all in the metro Chicago area and the hinterlands, hither and yon. I don't know where our next co-host is beaming in from. Could be way out by Riverside, could be downtown, could be the moon, we don't know. But you know him, you love him as the greasy meatball. It's been a while since he's been on the show. We're welcoming back good old Mr. Mark Sebastian from OptionPit.com, typing away furiously as usual. Mr. Sebastian, welcome back to the show, sir.
Hey, how's everybody doing?
We're doing good. It's fun to have everyone here who's actually named in the intro.
Now, the one thing I have to say, though, is I'm actually calling from Rainbow Hills, Illinois, which is one town outside of St. Charles. So I'm the furthest away this time. So, Mike, sorry. Bad news.
Could you keep
Rainbow Hills? Where might that be?
I'm looking at St. Charles, and it says the next town over is Rainbow Hills. So I made that up. But
I was gonna say, have you moved Option Pit World HQ yet again?
No, I can't decide if I'm in Rainbow Hills, Wasco, Elburn, or Lily Lake.
Okay, I've heard of the other ones, but still have never heard of Rainbow Hills.
They're saying it's a town. It's right next to St. Charles, Rainbow Hills.
They're swearing it exists. Google Maps wouldn't lie, Uncle Mike. Never forget that you've never met it. You've never been there.
It's right off of. They're saying Rainbow Hills is right past. It's on the other side of Peck Road.
On the other side of Peck Road. All right. I thought that was Campton Hills.
They're saying it's Rainbow Hills.
There you go. Learn something new about your hometown every day on this show, Uncle Mike. And before we go too deeply down the sleepy suburban rabbit hole, we're going to keep on rolling into.
And let's ignore the number of can of worms we could have opened with Rainbow Hills that we did not.
Now, hold on a second. Now, getting back to the geography, just a second ago, Mark, I was honored in that St. Charles was part of the Chicago metro area, but now we're a sleepy suburb again? What's going on here?
It just changes with my mood, sir. I'm a very fickle in that sense.
It's a little both. Let's say it's a sleepy suburb of the Chicago metro area.
There you go. It's
been called worse, I'm
pleasing
sure.
people on all fronts.
It's kind of like your drunk buddy at a party. Yeah, there's a party going on, but your drunk buddy's laying on the couch asleep, and you're probably drawn on his face.
Well, there we go. I'm not sure I really get that analogy, but it's an interesting one nonetheless to mull as we keep on rolling right on into the trading block.
The trading block.
All right, listeners, welcome to the trading block, and you can, of course, see why we don't get the exact gang together from the intro all that often here on the show, because sometimes we tend to devolve into silliness, but yet it's always a good time at the end of the day. And today on the street, it was a bit of a mixed bag. Most of the major indices closing pretty much unched on the day. The Dow exactly unched, the S&P following suit pretty much unched on the day as well. NASDAQ up slightly, VIX cash trending off to the downside, down about 0.6 of a point. Perhaps we'll start there. We haven't plumbed the depths of the VIX and the VIX cash for quite some time. Mr. Sebastian, you see anything going on in the land of VIX cash, VIX options, VIX futures that caught your eye that was worthy of note today?
Yeah, I think that you're going to see August not follow cash VIX as well as we might normally this late in the game until basically the print. But I think cash VIX is going to have a slight tendency to creep higher. Just kind of the way I'm, in a slow, sleepy market like this with low volume and not a lot of news, the big traders start to look at, one, how much money they've made, and two, what's in front of them. And I think this FOMC minutes that's coming up, I think the 21st, could have a real profound effect. That's what guys are worried about right now. And so you're seeing, these cash VIX rallies. August is not really following suit. So it's kind of interesting that, looks like September is kind of where all the action is right now.
Is that what you attribute this kind of a bit of an exhale today in the VIX cash to? Not much else really going on the street, not many big numbers that people were waiting for.
No, that and Japan. But, they, believe it or not, this morning, I did CNBC at 4:50 in the morning this morning, Mark. And
getting those prime juicy time slots.
Well, it's prime time in London, this morning the S&Ps were down 10, and so I was surprised the way we rallied back off this Japanese news.
Yeah, it did seem to take a lot of the steam out of the market, so to say, from a vol perspective. You'd see on a day like today, selling off in the morning, coming back after a weekend. You think you'd get a little bit more air in that balloon, but we didn't, actually. So that's kind of interesting, just from a pure vol perspective. Apparently, everyone had everything weighing on Japan and not much else for the rest of the week. So we'll wait and see how that unfolds. Of course, speaking of things happening this week, Uncle Mike, it's a good thing you're on the show today, because a big action in your neck of the woods today. Let's kick things off with the metal you love to cherish so badly. You have just hordes of it in your mattress. Of course, talking about silver, your favorite beast, rallying nearly 5% today. Just a freaking beast of a day here in silver. SLV, the ETF, of course, closing up about 4.5% on the day. I know you've been flirting with various ideas, various options, pun intended, out there in SLV land. What, if anything, caught your eye? What did you put on for today's movement? Or has this spike today gotten you back in and you've seen the movement you want and now you're ready to dive in with both hands into SLV?
Oh, we've been in with both hands. So that's the good thing. This is one where I want to see a little bit more of a rally tomorrow. Then I guess I'll be somewhat of a believer in terms of if I had a third hand to dive in with, I would at that point. Mm-hmm. But with this, it's interesting. It gapped up today. It basically filled the gap that it went down at. a few weeks back in June. So I want to see it kind of break the 21 level before, I hate to say till I'm a believer, because I've been a believer for a while, but I think 21 is going to be a pretty tough point of resistance. With the FOMC minutes coming up, I think that could be a catalyst for getting a little bit of a pop in it. But for right now, hey, today's a great day. It's a fun day it's a fun day to be in the metal world, assuming you're long, that is, and I'll take it for sure.
Are you just long a bunch of SLV, or you have some short puts, or what do you have on?
Mark, he's not just long silver, the raw metal. He's long silver spoons, and he's also long lots of cake, so he can eat cake with his silver spoons.
I believe he's actually even long Ricky Schroeder on the Hollywood Stock Exchange. I'm guessing that trade is not exactly working out too well for you, Uncle Mike.
He's long ascots and monocles.
As long as he can get me a seat on that awesome train that kid used to ride around his house, then I'm in. Yep. I don't care what the rest of it is. But Uncle Mike, why don't you refresh
our monocle? That's what we call it.
Yes, exactly. Uncle Mike, why don't you refresh our listeners on what you have going on out there in SLV land? Are you just straight up long, which is probably not the case for you? You have a lot of short put positions. Are you legging into long calls? What are you rolling on out there in SLV land?
Right now, we went through my August 20 call today, and I also have a little bit of just straight long silver right now. Not a lot, but just a little bit of it. And with it, I also have a put at the 18 level, and we're doing a couple of things with some calendars and some things like that on the put side, but nothing too significant to speak of. But for now, tomorrow's going to be the day when I'll make a decision as to whether I'm going to roll up or not, because in the cash trading day today at 8:30 Chicago time on, we had a relatively flat day in the world of silver and gold for that matter.
Now, of course, we get a lot of people writing into this show saying, oh, wow, I can't write calls. I'm going to get called away. You're a perfect example, Uncle Mike, of someone who routinely writes calls for income and not afraid to get called away, blowing through your strike today, and yet there's a lot of options, pun intended, once you hit that level. So a good reminder for our listeners that being called away is not the thing to fear. It usually means your strategy's working out pretty well.
Yeah, it's to give you an idea of it, we made clients a lot of money with the run-up in Apple, silver, and gold a couple years ago with having it run through our short call too quickly on the covered call side of it. That is a problem that I do cartwheels over, quite frankly.
Since you mentioned the fruit company, let's hit on them really quick, too. That's your other, of course, big interest these days, or perhaps growing interest yet again, and, of course, up 3% out there again today as well. You guys still active out in the weeklies and rolling those positions, or are you taking more of the longer-term view in Apple these days?
Long the underlying, and then the hedge with which we have on the underlying, we're still long. I'm still not ready to roll up my April 390 put yet. I want to see it break 475 before I do that. But what we're doing as a means of financing the April 390 put, instead of doing covered calls, what we've been doing is just a variety of calendar spreads from in various weeklies, whether we're doing the credit spread with benefits, with which I talked about on the show last week. We've been doing just traditional credit spreads. We've been doing calendars. We've been doing a lot of things along those lines, and they've been fairly bullish positions with what we've been doing, and it's kind of like a collar with no covered call on it, which has been kind of nice since we've been doing this in Apple since 4:30. So you're right, it is like the old days. We got Sebastian back on the show, and I'm talking about Apple, gold, and silver all the time now. I love it.
It's like October 2011 all over again. The heady days of the early option blocks. Of course, speaking of heady days, we saw some action today in another name that we've been hitting on quite a bit on the show of late. A lot of people have been writing in and asking questions about as well, because it's had so many movements of late. Of course, Blackberry, they of the infamous former RIM, I should say, and of the infamous earnings of late having their legs cut out from under them quite a bit. A lot of people have been writing in with different ideas and questions and strategies about Blackberry. We see this a lot when these names start to get a little bit more juice, a little bit more vol, and also trending down towards the lower end of the spectrum. It's not a $100, $200, $300 name that really consumes a lot of margin in your account when you're writing these things. So we've seen a lot of people active in Blackberry, and people have been writing in saying, writing the 9.5 puts, writing the 9 puts, is this a smart trade? Well, if you did that, you're looking pretty good today, because Blackberry announcing something we've been speculating here on the show about for quite a while, that they're probably going to be in play sometime soon. The patents alone have to have some value. They have some cash and extrinsic value there, or I should say intrinsic value there on the old books. So a lot of meat on that $10 or south of $10 price, and today rallying 10.5% or a buck essentially to $10.78 off that very news that they are putting themselves in play. And of course, options following suit. This is a name that usually does about 100,000 contracts a day, so that's been fairly active of late, doing 3x that today, doing 300,000 contracts. So a fairly active day in Blackberry. A lot of you out in there who've been writing in about Blackberry quite a bit. Hopefully you got those puts off because you did it right. Hopefully you got the other end off too, and you got the bullish risk reversal, because you're looking quite pretty today if you did that. Now, Mr. Sebastian, I know you boys over there in the pit have been delving a lot into the land of the Orient of late, and what's kicking and what's cooking over there. What's catching your eye over there these days, in particular with some of these Chinese names you've been watching for your clients?
Andrew's the Chinese guy. I'm less into that Chinese market. I think there's plenty of opportunity here without having to worry about kind of crazy stuff. Now, that said, a lot of the international markets, the volatility's been really, really cheap. One that Andrew and I were looking at in particular is EM, where the stock continues to move around, but the vols are cheap. But there's plenty of right now, I think it's easier to find cheap vol than expensive vol. The expensive vol is moving around and thus is not expensive, and the cheap vol is really, really, really cheap. There's been very few great opportunities to sell premium. The loan opportunities maybe in the credit card companies, but that's about it.
I wouldn't expect you, and particularly Andrew, to be the big premium sellers, of course. He's Mr. Buying Juice.
It's not true.
Working on the opening chapters of his book, of his juice buying book as we speak. So
he's writing a juice buying book?
Yes.
Yeah, but that's different. That's from his juicer from that Jack LaLanne.
That's his Jack LaLanne Juice Tiger special.
Andrew, you should see Andrew in a leotard.
I've seen him pulling the boat with his teeth while he's swimming kind of thing.
Oh,
so
yeah.
It's a pretty
great.
impressive.
Actually, funny thing, Andrew was at my house a week and a half ago when we had our thing. As he was leaving to say goodbye, my kid, here's how great Andrew is. My kid is at our front window going, "Mr. Joe Bonazzi, don't go!" It was very funny.
Yes.
My kid doesn't do that for me. Just saying.
And he has that Mario accent too, which is
he does. He goes, "Mr. Joe Bonazzi, don't go!"
I didn't think your kid was born in mainland Italy, but
yeah, no, you should see him. He's got his overalls. He's a plumber.
You're of the Rome Sebastians, I believe.
Mm-hmm. There you go.
All right, let's just close up the trading block here with a little something I saw today that just caught my eye and was just I don't know how you even would categorize it except for pretty much outlandish and stupid. These are the kind of things we mock all the time on this show. We did it a while back with some financial advisors who said, why would you want to buy a put on a stock you're long when if you're thinking about buying a put, you should just sell that stock. We, of course, rightfully mocked that, and we happened to be putting together some content for our site today and working on something. We came across some interesting things. One of them was a FAQ on the Motley Fool, which turned out to be their quote-unquote options FAQ. And so I was looking at that, and I hate to even send people to this because it's so ridiculous, but this kind of gives you just some of the thinking in some of the outlets that should be a little bit more nuanced, you would think. And yet, for whatever reason, they apparently still have this 1975 viewpoint on options. Someone wrote into them saying, aren't options good for hedging? What's wrong with buying some puts to protect your gains if you're worried about a stock staying power or a massive market correction? A very fair question. And the Fool people go on to answer, there's a bunch of reasons not to hedge your positions this way, blah, 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 blah. They say, if you're a true fool, you're holding the stock in question because you expect it to appreciate in value over time. You're not into watching short-term fluctuations. If you buy a put, they say, you're betting against yourself. You're going to let that stock alone so that it will achieve a fairer value and profit you thereby. If you're not confident the stock will still appreciate and regain any value it might lose upon market upheavals, you have no business holding it. Don't buy a put to protect your investment. Simply sell it to do so and put your money elsewhere.
I had heard a rumor that they were coming out with Motley Morons, but
they certainly are living up to their name.
They wanted to merge it into the Motley Fool website.
Unbelievable.
What kind of a dummy writes that? I mean, that is just the silliest, most ridiculous, ridiculous, wacko thing I've ever heard.
And that's what passes for their options content. If you come to them and search for their options stuff, this is what they tell you, which is exactly what that advisor said last year when I was at that conference. And
maybe it's the
amazing.
Same guy.
Yeah, maybe it is the same guy. Maybe he writes for Motley Fool. So just want to throw that out there, a little nugget for our listeners. Hopefully you guys out there listening to the show.
The Motley.
Yeah, just the fools.
I have so much to say on that, but I'm going to save it for the viewer mail that I'm gonna add with that in the viewer mail.
All right, I like it because there is a lot to say on that, and this is not Joe's blog. This is a relatively well-known outlet. This is kind of going back to what the New York Times said a few months ago, the exact same thing, and now this. But this is supposedly a specialized financial outlet. They should certainly know better than this. So I wanted to highlight that, listeners. Don't go to Motley Fool, I guess is the moral of the story, for your options knowledge. If you want to look at other stuff, stocks, assets, whatever you want to look at over there, go crazy, but don't go there as a guide for your options information. All right, and let's keep on rolling now, right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, that funky tune means it is time once again for the Odd Block. I hope you all have your fedoras in hand. And if you haven't done so already, if you're not driving, if you are, pull over to the side of the road before you do this. But, of course, you can follow along with us on the mothership. Surf on over to theoptionsinsider.com where you can find all of these alerts in much greater detail, as well as many more that we're not going to have time to get to on the old show today. And before we dive into the new stuff, let's kick back. We always like to file some names to watch here on the old Odd Block, and to see if they're going to come to fruition in some interesting ways. If you remember back a little over a month ago, back on July 1st, we profiled Air Products and Chemical, ticker symbol APD. At the time, we highlighted a lot of people lighting up the puts down there, particularly the July 90s and the July 95 puts. It was interesting for a number of different reasons. It was a lot of volume. People bought about 7,000 of the 90s and 1,800 of the 95s. It was also interesting, a lot of it was on small lots, 10, 20s, 100s. That could be someone really trying to disguise their execution, or it could be a newsletter. Typically, it's the latter, a newsletter making a recommendation, something like that. People were lighting up these trades all day going into that. Of course, they had earnings on the 23rd, so it seemed like a bearish bet ahead of earnings. But people were buying a lot of July 90s, July 95 puts, looking for a very near-term correction. Fast forward a little while later here in APD, and they didn't exactly get that. The stock at the time was trading in the mid or so 90s when they put these puts on, and we saw nothing but just pretty much straight up to the upside ever since that trade. I hit 98 going into earnings when they really gapped up, hit it's trading over 100 right now, closing at 103.20 today. Of course, a little bit lower before it got to expiration there, but still, moral of the story, the people betting on all this very, very near-term downside, not exactly the best trade. In fact, if you looked at the way we wrote it up on our site, we said, hey, this is a great opportunity to actually write these puts. If you did that, you looked pretty good because these puts all went out worthless. So, interesting thing. Not always is it the obvious thing when you want to play this unusual activity. Sometimes it is indeed taking the other side of it, and that worked out pretty well here today. All right, fast forwarding to today, and we're going to kick things off with Sandstorm Gold Limited, ticker symbol SAND. This one closed up a whopping 38 cents. This one closed up a whopping 38 cents, or 7%, because yes, this is an odd block special. This is a sub $6 stock, closing today at $5.93. This is the name that does a whopping 500 contracts a day, doing a total of 1,000 today. And looked like what really kind of caught our eye here on Sand was the AUG5. So some near-term option trading here on Sand, with these AUG5s going up in two essentially mid-sized blocks that hit the bid on two different exchanges. So that gives a little bit of an extra aggressive tone to it when we see that kind of stuff going up. And it looks like, given the size, not enormous size, big size for this name, looks like closing pretty much here on these Sand calls. Is that your take as well, Senor Sebastian?
Yes, sirree, diddly do. That is my take on it.
Thank you for that diddly. Is that the technical term?
It is. This is almost a Longo special here, Mark. It's a little shy. I think it's got a little too much value.
$3 is where we really get excited here.
Yeah, I mean, right. I get even more excited when it's like sub 2, but this is interesting nonetheless. This is one of those where sometimes you have to wonder, like, why are they using calls rather than just the stock,
If Alex were here, he would be saying the exact same thing. Unfortunately, he is taken ill today, so Mr. Sebastian will take the Alex role today and say, why are people doing this ridiculous trade? But we like to highlight those every now and then because we show...
you want me to do more of the Alex role? Trading should be 24 hours a day. Any proprietary product is an evil product.
I don't know if he really hits the last one. A little bit. Of course, he was at ISE, and they were getting into that realm a little bit, too.
I know.
So.
Well, even, right. He was probably, whatever.
In fact, they initiated a new lawsuit again today, so we're back at the...
shocker!
I know.
Shocker.
They have so many lawyers on retainer there, they don't know what to do with them all, I guess.
I've got a great idea. Why don't they come up with their own product that works?
They got some cool stuff, but not on the product side, on the technology side. Like a lot of these exchanges, they're getting more into the tech vendor realm, it seems like, with the implied order stuff. Trying to get some of these spreads traded on their exchange, which is kind of interesting. So that's kind of where I think they're making a lot of their bets these days, on the tech realm, like a lot of other exchanges are these days. But we digress here from the odd block. We'll kind of keep on rolling right on into the next one. Sanchez Energy Corp, ticker symbol SN. This is the name that closed at $21.91, down fractionally on the old day today. This is the name that does about 450 contracts, so that's right in the gold odd block sweet spot there. Doing about 1,400 today, so that's actually a fair amount of paper for this little name here today. And what's interesting about it is pretty much all of that, 1,200 contracts or so, went up in one pretty much sizable, well, not one sizable trade, but one strike here in the Jan 2014 21 calls. We saw 1,200 of those puppies going up on open interest of just 25 contracts. It went up in small chunks, so it wasn't just one big block lifting the offer on these things. But some of the latter blocks were a little bit larger. But it looked like someone was lifting offer on some of these early pieces in particular. So someone had to get in, and they wanted to get in right now today on these 21s, which are actually in the money calls when you're looking at these. It's not closing near 22 today. So someone really wanted to get some... you can't even really call it upside exposure. You can call it at-the-money exposure right now here in Sanchez. What's your take on this, Senior Meatball?
This one's almost as exciting as sand. It's another kind of cheap stock, but... this one, at least the guy put some thought into his trade. It's not just like a why bother type trade. So, I don't know. I'm not, this isn't one that I follow too closely.
I know you're up at night, losing sleep over what's going on in SN. It's because you're right. It's not the typical someone coming in just loading up on upside. It actually is a little bit of meat on those bones. If you're going to do it, that's an interesting way to do it. Of course, we're going to talk about ways to use options as bullish positions or bullish surrogates for the stock a little bit later in the old mail block. I think we're going to keep on rolling now with a couple of others here. First off, a lot of little names in the odd block today, which is the way we like it. I think this is a whole Longo special odd block section here. Next up, Rockwell Medical Inc., a odd block newcomer, ticker symbol RMTI, a whopping $4.91 here on this one, up about essentially unched on the day. And this is a name that does about 1,700 contract, which is a lot for a very, very low price stock and a lot for the odd block. Some of the names, like I said, we're just talking about doing a couple hundred contracts a day. And they're going even beyond that, doing nearly 7,000 contracts today. Looks like a lot of that action really being located here in these SEP puts. We saw these SEP 4 puts going up 3,000 times. And looks like we also saw on the other side of that the old SEP 6 calls going up 3,000 times, either for a risk reversal, probably more likely a collar going up here. So someone probably a very, very large institutional asset holder here, putting on the SEP 4-6 collar, locking it right around the at-the-money 5 strike for some pretty substantial size. And actually, he can do it for you can actually collect a little bit of credit here. If you do it well. So not a bad trade overall. What's your take on this one, Senor Sebastian?
Yeah, more of the same. The credit's nice. That's kind of the key to the whole trade, right?
It does make it a little less painful, yes.
Yeah, that's why you do this trade. And so, at least it's thoughtful. The way it's constructed makes me think the guy knows what he's doing. So, that's kind of my first test for whether I'm interested in following along with some unusual activity.
Speaking of things that are executed a little bit better than we typically see, we're going to close things up here with an old name. Haven't seen this one really surface again in quite a while, certainly not in the odd block. Used to be a big player down on the floor back in the 90s, and the dot-com boom kind of had some rough times there over the past decade. This is Micron Technology, ticker symbol NU. This was everyone's darling back in the go-go 90s and has seen some hard times of late. Down about 16 cents today, closing at $13.83. This is the name that does about 100,000 contracts a day of late, getting some inflated volume going into some of this activity today and doing about that same amount today. But what was interesting, talking about nuanced ways to do things, how many times have we seen people coming into the odd block and just loading up on 20 delta calls or 25 delta calls and just gobbling them up, and that's our quote-unquote unusual activity. That certainly counts in a lot of names that do pop, but how often we also pontificating here on the show and saying, wow, I wish we see something different. We should see some people coming in and taking advantage of doing some other ways to do things, maybe some ratios, maybe some verticals. Looks like this guy here listened to our pleas, listened to our cries. We saw the October 15-17 call spread going up. So not only was he doing a vertical, but he did it on a ratio 1/2, 4,000 by 8,000. Actually close to almost 6,000 by 12,000 by the time it was all said and done here. Doing it for about 13 cents. So he got a decent way to do that. You know, we talked many times about, like I said, people coming in, just loading up an upside. Nice to see someone taking advantage of what we talked about, taking advantage of skew to reduce his premium outlay, reduce his overhead on a trade that has a much better probability than this coming in and, let's say, loading up on the 16s outright or something like that. I know, Mr. Sebastian, you're not an overall fan of a ton of net short exposure to the upside, but if you're going to do it this way, this is not a bad way to set it up.
No, I agree with you, and that can, setting that, who knows, maybe this is one of those kind of weird maybe it's a fix, maybe this is like the classic RCM 1/2 call spread fix. That would be one of my ideas. I don't know. Was all the paper opening? Was all the paper opening or just the two?
Let's see here. Looks like they both were opening. Yeah, because there's a ton open on those OC 15s.
That's a smart. I love bullish 1/2s. It's bearish 1/2s that scare me sometimes. And even those I like. The ones I don't like are let's just sell a call or let's sell a put naked. I always thought the front spread was like the ultimate trade. That's my favorite.
Yeah, it is a good one. And it's nice to see people taking heed of what we say here on the Odd Block and mixing it up a little bit. So some activity in Micron. Of course, we'll see if this guy bears watching. We'll put it in our to be watched category here and see if getting closer to OC expiration, if this guy actually gets he's on the right end of the train. Given the fact he's not just buying these calls outright, he needs a little bit less wiggle room to make this happen. So an interesting trade, one to watch. I'm not sure if I agree with the overall sentiment on Micron, but it's still an interesting way if you're going to do this. It's better than just buying those 15s or the 16s or something along those lines. All right, and now we're going to keep on rolling right on into one of my favorite parts of the show, because it's your part, the mail block.
Now it's time to empty the mailbag and see what our listeners have to say. It's the mail block.
All right, everybody, welcome to the old mail block. This is, of course, the portion of the show where you, the listener, get to take the reins. And this time I don't get to take much of a rest, but I'll get to take a little bit of a breather here. I'm going to kick things off with a question from Mr. D. Adams. Maybe he's related to good old Douglas Adams. I don't know. If so, rest in peace, sir. But he says, what is the best way to express a long-term bullish position using options? It's a great question because it's so open-ended. A lot of different ways to interpret it. I think I have a feeling what I'm going to say is going to be very different from what Uncle Mike is going to say, very different from what Sebastian might say, because it is very much a subjective thing. Depending on the scenario. But before I keep going, I can see Uncle Mike, even via the power of Skype, just champing at the bit there. Really, really looking forward to answering this question. So, Uncle Mike, I will let you have the pride of place and go first, sir. What is your answer for Mr. Adams here?
Well, I've written a book on that exact question called Go Long, New Option Strategies for Buy and Hold Investors.
There you go.
And so I'm going to kind of give you a summary of some things that I think can help you with what you're trying to do with it. I think that if you have a longer-term outlook on on a stock or an ETF or an index, whatever the case may be, then by all means you can still use an option. I think that that's a very viable strategy, and don't be shy from it just because people who admit that they are fools say that options aren't the best way of doing things.
Who could you possibly be talking about, sir?
I don't know. But anyway, with that, a couple of ways with which you can express yourself. 80s reference to Madonna. Sebastian, see, you're inspiring me every time you come on this show.
I love it.
Yes. And if you are willing to own underlying, for one, if you want to own the underlying, you can express yourself in a long-term view by owning the underlying by using a collar, by using the 1-by-2 ratio spread, like what we were just talking about in the odd block. That's one way of doing it. And there's no rule that says that you have to use the 1-by-2 as a fixing strategy or as a repair strategy. You can be bullish on the stock right from the get-go and trade it right away. My favorite way to express a view on an option or on a long term on a stock while using an option is with just buying a call option. I like doing a diagonal spread 6 months out and selling calls against it in the near term. With that being said, you might say, well, but Mike, my viewpoint is longer than 6 months. And I would say, well, that's okay, Mr. Adams. You can still roll the call out once it gets to within 2 or 3 months of expiration, or wait till expiration if you want to go deep enough in the money. So that's another way of doing it. One of my favorite ways of doing it is, let's say that someone has $100,000 and $90,000 of it is outside of an IRA, $10,000 of it is inside of an IRA, and they want to have bullish market exposure with that $100,000. They have a higher net worth than that, obviously, but let's say that we've determined that that $100,000 is going to be their market exposure. Well, what we can do with the $90,000, come up with some type of what we deem as safe, which that answer is different for every client, some type of safe instrument, and then with the $10,000, buy calls on it. So let's say that we have bullish exposure, and by gosh, we're actually right. Well, if that's the case, then the catalyst for growth is taking place within your IRA. And by doing that, you're being tax efficient with it. You can roll in, roll out, get in, get out, do whatever the heck you want in an IRA, and who cares? One thing that I'm doing for several clients, I'll just give you one example. A client has about $1 million with me, and most of his money is outside, or a good chunk of his money is outside of an IRA, and it's not doing badly, it's growing, but a lot of it's in municipal bonds. He actually lives in one of the few states with which I feel comfortable using municipal bonds, which there's not very many of those, by the way. But within his IRA, that thing's going up like gangbusters. And the reason is that we're using his long-term bullish exposure using SPY, and we're doing a diagonal call spread, and it's all concentrated into an IRA. Now that way, from a tax standpoint, he's gaining his money in an IRA, and the portfolio is going up just as much as it would as if we put all stock throughout the account and balanced everything. But now, magically, his taxes get deferred longer because most of his gains came in an IRA. So, to answer your question, I think the best way with which to express a view on a stock long term, I like a diagonal spread. And then there's times with which you can be just long premium if you feel volatility is a little bit lower, or there's times with which you can maybe tighten it up a little bit, go deeper in the money, go out of the money. 3 chapters on my book on that exact strategy.
I love it, Uncle Mike. I echo your sentiments exactly. That's one of my favorite trades, one that I always recommend for people looking for this exact same type of question. You get the 6 month out, maybe a year out, maybe a leap if you're a little bit longer term like that, in the money, deep in the money call, get some nice stock replacement strategy there. And then you're right, exactly, right, the near term call against it. You have a much better covered call scenario than just using stock. It's cheaper. You're using your capital much more efficiently. You got that little bit of an income stream to offset the price of that long-term call. You have Greeks now on this long-term position versus just stocks. You have some Vega that can offset the decline in the stock. You have the delta that will decrease as the underlying drops. So in many ways, it is a superior position to certainly just buying the stock outright and even doing a covered call with the stock. I love that strategy. It's one of my favorites as well. Mr. Sebastian, what would you like to chime in here for Mr. Douglas Adams, or whatever Mr. D. Adams stands for?
Well, Doug, I think I don't know what else I would add besides what Mike said. I mean, I think he hit the nail on the head. Is that there's really the one thing options really give you is flexibility and the ability to manage your own money in a tax efficient way. Well, currently, and I think it depends on, what your account setup is, what everything is, where volatility is, and whether you're looking at the overall market or an individual stock. When implied vols are really, really low in certain stocks with long-term bets, you can do really well with an out-of-the-money call. I know it sounds ridiculous, but you can. I like owning leaps in the money. I like doing the wheel trade. I mean, that's one of the best long-term bullish positions, in my opinion. A presentation I did for RCM recently. And so the question shouldn't be what's the best long-term bullish position using options, because there is no answer to that. But you should be asking yourself, what's the best long-term bullish position using options for you and your personal financial state? And, for a question like that, you talk to someone like Mike Tosaw or a Mike Kavanaugh or a me in a different way.
All kinds of great stuff there. Hope that answers your question. Probably gave you more than you even asked for there, Mr. D. Adams. Hope it is Douglas Adams. That would be something quite special indeed, given the fact that he did pass away. But no. But gallows humor notwithstanding, of course, yeah, there are lots of ways to do this. We talk all the time on this show about short puts and bullish risk reversals. Those are more typically shorter term type strategies, but you can use them to great effect in long term trades as well. So a lot of different ways to skin that cat. Really depends what you're looking for, what the scenario is, and what your own risk tolerance is. Let's keep on rolling here. Another great question here from Mr. Terry Russ out of Scottsdale, Arizona. Hopefully it's nice and cool down there for you right now, Mr. Terry. And he writes, can you guys do a quick rundown on the difference between iron condors and iron butterflies and when I would want to use one versus the other? Thanks for this great show. Well, a great man once told me that the difference between an iron condor and a simple iron fly is that an iron condor was an iron fly for cowards. But that's that aside. Mr. Sebastian, this sounds like one that's tailor-made for you. Why don't you do a quick rundown here for our friend, Mr. Terry Russ from Scottsdale, Arizona?
Yeah, I mean, I would say that that's kind of true. I really just don't like iron condors very much. My whole thing is either butterfly or strangle, generally speaking.
We won't tell our friend Jared over at Condor Options that you just said that, sir.
Well, he'd prefer strangles too. The reason why you do an iron condor is for margin, not because it's the most efficient way to trade. And I don't love them. And the nice thing is that, yeah, you get a nice wide landing area. The problem is that the risk reward just isn't there most of the time, and I'm not a big fan of them. One of the nice things about butterflies, standard butterflies and iron flies, is that they really take advantage of kind of the way decay changes in options. The further away you move from at the money, the more linear decay becomes, and the closer you are to at the money, the more exponential decay is. That's what makes things like weekly butterflies such an effective way of trading, is that you're short something that is decaying exponentially and long something that is decaying linearly. That's how you make money in this business, folks. And that's really why I prefer, personally, I'm a fly guy. And
you are very much a fly guy, sir. I can
according to the ladies.
You were on that show back in the day, weren't you, with the fly ladies?
Well, it's true that all the ladies say I'm pretty fly for a white guy. That is true.
Indeed. All right, thank you for that. Senior Sebastian, you are indeed quite fly for a white guy, even from Riverside, Illinois, scenic Riverside, Illinois. Mr.
It is a beautiful town.
I'll have to get out there. Last time I was out there, it was very flooded, hence the name Riverside. So hopefully things have settled down since then, and it looks much nicer in the light of day than it did last time. But speaking of the suburbs, let's beam back out to St. Charles, Illinois, where Uncle Mike is champing at the bit yet again to dive in, give us his 2 cents on the iron fly versus the iron condor.
Well, the first thing you got to do is, if you are doing iron butterflies, you got to make sure you do your research during the day and not at night, because otherwise you just be some fly-by-night kind of guy, and you don't want to do that.
Wow. It's just flying fast and heavy on the show today.
Well, that would be an iron cricket that you just told right there.
Pretty much. But on a serious note, when doing the two of them, I wouldn't mind an iron condor with the VIX at this level, I actually had a strategy where I got a bunch of people into it, telling them, yeah, I'm looking to do some iron condors. This is about 6 or 8 months ago. I have yet to do a single iron condor, just because of the fact that with a VIX around below the 13 level, even below the 15 level, I just don't feel comfortable doing an iron condor in this environment, because of the fact that you have to get the strike prices so doggone close together. With a butterfly, like what Mark says, is that you're still going to get at the money time decay, whether you have a 13 VIX or a 43 VIX. And the difference is that with the options that are out of the money, is that you can make the adjustments on them. And like what Mark says, he's right. You're actually short the at the monies and you're long the out of the monies when comparing exponential decay to linear decay. So with that, the other difference that needs to be said is that having traded iron butterflies, the one thing that I've noticed about them is you got to really pay close attention to them. You have to, if you're trading an iron condor, you can go play golf, get an alert on your smartphone if the market moves 20 points or whatever it is where your risk management point is. But with an iron butterfly, you better get your butt in that chair and you got to be adjusting that thing all the time. I think that's the way that everyone should trade anyway, but that's just me and my opinions on things. But iron butterflies are a lot more high maintenance. What I don't like about the iron condor is that they work great until they don't. And when an iron condor goes against you, and this is assuming that you have your credit spreads way out of the money, once you get to that point, whether it touches your short strike price or when it touches the 25 delta on the short strike price, whatever the case may be, you don't have a lot of choices a lot of times, especially when the market is going up and volatility is going down. Because of the fact that you are actually short volatility on that, that makes it kind of tough to make adjustments when the market's going up, especially from what I've found. So this marketplace, I really don't like either of them. I like the calendar in general with both my hedges and any short-term trading that I'm doing. That's my preference in this type of market. But nonetheless, I like both the strategies, but I would probably lean towards the iron butterfly if I had a gun to my head.
Well, I think it's unanimous here on the old panel today. I've said many times on this show that one of my favorite strategies, along with the good old bullish risk reversal, is indeed the good old iron fly. I've never really understood the groundswell of support that has sprung up over the last few years for iron condors. Iron condor newsletters, iron condor websites, iron condor this, iron condor services. It's iron condor, iron condor. I think part of it's because the name is kind of sexy, and part of it is exactly what you're talking about, Mike. It kind of like it offers a lot of the appeal of the iron fly, but without as much high maintenance, and that's great if you want to go out on the golf course or you have a day job. So I can see how that appeals to certain people, but I've always been much more in the iron fly camp myself. So interesting stuff. Hope that answers your question there, Mr. Terry.
No, what I was going to say is an iron condor is kind of like a girl. You know that girl that you meet, you think she's so cool, and then you date her and it turns out she's completely crazy? That's what an iron condor is. Butterfly is going to be your consistent 7, cool, fun, lets you watch football, doesn't hate all of your friends. The iron condor is the exact opposite. Looks really good, you think it's awesome, and then it just goes completely bat crazy on you.
I'd actually think it's kind of more the opposite, because the iron fly could go bat crazy on you a lot faster. So maybe you got a really high maintenance lady.
But you're not putting up as much risk. That's thing.
True. That's true.
Like an iron condor, you're like chasing this girl because you think she's so awesome, and then you're dating her for a while, and the next thing you know, you find her shaking in the corner carrying a knife and asking you where you've been, even though you told her that you and your buddies were going to Molly's down the street for a drink or two, and you've been there the whole time, and it's early, and you get what I'm saying.
That is eerily specific, sir. I'm getting a feeling we're hearing not so much an analogy as a flashback.
Well, the other thing with a condor is that oftentimes newer condor traders have the illusion that they are immune to risk management, thinking that, so long as the stock doesn't move 12%, I'm okay. And that's true, but then the day the stock moves 12%, the old adage, when in danger or in doubt, I said that wrong. The old adage, cut that, Kyle. The old adage comes out, when in danger or in doubt, run in circles, scream, and shout. You do that, you panic because they're not used to doing any risk management because they haven't had to for 4 months. Month 4 comes around, you get enough market movement, the account gets blown out, and another arrogant iron condor trader goes by the wayside.
There you go.
Indeed. All right, and that is going to do it for the old mail block. Great questions. If you'd like to join our friends, Mr. D. Adams and Mr. Terry Russ, then, of course, visit theoptionsinsider.com or find us on Twitter or on Facebook. We're just twitter.com/options or theoptionsinsider.com on Facebook. Or, of course, you can find us the old-fashioned way, questions at theoptionsinsider.com. Just be sure to put the name of the show you're referring to in the subject line so we can route it appropriately. And now we're going to keep on rolling right on into our final segment, Around the Block.
Around the block.
All right, and those car horns mean that it is time for our final segment of the show, of course, Around the Block, where we peer deep into the murky ether of the future and let you know what's on our trading screens for the rest of the week. And Uncle Mike, I know what's on your trading screen. I hate to even bring it up yet again, but it is that time of year. Once again, every quarter we go through this, I find you shaking in the corner, reliving your horrible, horrible flashbacks. Yes, it is Cisco earnings time. They are coming up on the 14th after the close. Cisco having quite the rally these days, trading 26.34, a clean 10 handles north of where it was, I think, the last time we talked about it. Have you come around again on them, or are you just too burned to ever go back in those waters?
I have much anger towards Cisco. We are not even going to talk about it.
I love how your voice drops about 3 octaves whenever I bring them up.
That telecom. That telecom.
Lovely. Did you do that on CNBC at 4:50 in the morning as well?
I didn't. I did go, it is early.
They don't have the Singing with Sebastian segment yet?
It's we got to get that. I think that should be on the car.
If I can find a sponsor, I'm happy to air that on my network, sir. Singing with Sebastian. It'll be a little contest. They don't have any of those singing contests now, so we need a few more of those. All right.
I'll sponsor that. How much you need?
There we go. I like it. We can talk after the show. All right, Mr. Tosaw, when you're not crying about Cisco, what else is catching your eye for the rest of this week, sir? Obviously, silver in the metals on quite a bit of a tier. I'm assuming you're watching those a little bit more for the rest of the week here.
Yeah, I just want to see if they're going to have some continuation in it. It was kind of a dull. If you watch the daily action on the metals today, it was kind of dull after the big gap up in the open. So I want to see if we have some continuation. 30-year went down a little bit, so just kind of watching the bonds a little bit to see if we get any. It's kind of been rallying a little bit going into today, and just curious to see what the bonds are going to do as well, to see how they react in the other areas of the world.
Now, Sebastian, I know what you're watching, and the rest of the market is indeed watching. Coming out on the 15th, of course, Cosi earnings, that delicious, delicious sandwich chain here in and around the Chicago
world
area.
Market, NTAP's on this week. That's a little interesting. Agilent, a couple other small names, but earnings season's mostly over.
Well, the $2.35 Cosi doesn't float your boat, sir?
Well, I love me some Cosi. It's interesting when 2 shares of stock is the same price as 1 cup of coffee.
Yeah, I know. There's something there.
I know.
Oh, wait, are we talking about Starbucks at $50 a share?
No.
You're pretty close.
You're
pretty close.
I'm on a roll.
No, I think you got to pay attention to the earnings this week, the cycle. And then really, there's not a lot of economic stuff, but the economic stuff that comes out, I think Bullard is speaking Wednesday after the close. And that could be one that I think draws some attention from the markets.
So we'll keep an eye on that one. And unfortunately, that is all the time we have for this episode of the Option Block. Of course, we'll get much more deeply into Cosi on the next show, even though it isn't optionable, but still a fun one to watch nonetheless. All right, and that is going to do it. But before we go, let me check in with my cohorts, my original partners in crime here on the old Option Block All-Star panel. Great, great fun to have them both back on the old show at the same time. Starting off with you, Mr. Tosaw, what is coming up down the pike on the old webinar train?
This Thursday night, Mike Cavanaugh is going to be debuting a CTA with whom we have been partnering up with that has a philosophy that bonds might be going down. It's a bearish bond CTA, and he's going to be talking about that, and we're excited about it. So for more info on it, rcmfutures.com.
I believe having almost that exact same conversation almost exactly 2 years ago on our Option Block Live episode we did here in Chicago, having a long conversation about how bonds could go nowhere but down. And 2 years later, we're still having that conversation. So check that one out. Interesting. Who is this Kavanaugh fellow you speak of? I'm not familiar with him.
He's a nice guy. He's some Irish guy. He's a cheesehead.
All right. And last but not least, Mr. Sebastian, what is cooking in the land of the pit?
I'm doing a guest webinar for Option Trading IQ Thursday at 8 o'clock. That will be recorded, so if you have to pick one, and I know both of us record, so pick one or the other. Mine's going to be on principles of risk management. So if you're interested in how the treasuries are going to move, you should watch Mike, the one Mike and Mike are doing. If you're interested in kind of more active risk management type of stuff, then I'm the one for you. Either way, you can't lose. So go to optionpit.com/events to register.
I'm checking out these Options Trading IQ guys, and they're all over the Iron Condor, 5-week Iron Condor course, helping you trade Iron Condors.
Notice that they picked me as the number one option blog on the entire internet.
Well, there you go. They have some taste then, I suppose. Or they've missed all the other thousands that are out there.
Well, that's why he's coming on. He really admits that he's not an expert, but he likes options, so he's, we're talking about potentially partnering up and maybe just I'll handle some of the weight of the education business.
A mouse ear Iron Condor. All kinds of good stuff lurking over here.
A mouse ear Iron Condor.
Check that out at optionpit.com/events. And, of course, Alex couldn't make it, but don't forget to check out all the great educational events they have coming up at Options Express. And for the love of God, if you've been listening to this show for the past almost 3 years and you're not an OX client yet, then get the heck over there and serve on over to optionsexpress.com. Tell them we sent you here at the Option Block. You get a lot of great stuff when you do. And I think listening to all the stuff we talked about on the show here over the past 3 years, I think you can see the value that OX and a firm with their resources can really bring to the table for you, the Options client. So check it out. And, of course, check out all the great educational content they have over there as well. And on behalf of Alex, who couldn't join us, and Mike and Mark, and of course myself, we want to thank all of you out there in the listening audience for driving the Option Block through the stratosphere yet again. And we'll see you next time right here on the old Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.